Good afternoon, guys. This is Scotty P. Hey, I had that interview with crypto tax accountant guy. I'm going to break this up into a couple of parts so it's not too much to sit and eat at one time for you. I will apologize for two things. Number one, this first part, the audio is a little tough because I was doing it on my phone because I didn't have his permission to record yet. So I apologize for that right away. And then secondly, after I turned the camera off while we were talking real numbers, I tried to record the very, very last part with my phone again, and for some reason it wasn't there when I got in to my car and started heading home. So I'll try to do my best to remember what we talked about there, but the rest of the information included here, and I'll probably do it in a couple of different videos back to back. To make them smaller bite-sized pieces for you, but here you go. Pretty interesting stuff. Hey, how are you?
Good. You Scott?
I am.
Clifton Myers.
Hey, what do we do? I'm an old. Okay, so we're not doing math. That's cool.
Ask if you don't want to.
I'm old school. I'm old school, brother. That's the one thing I won't mind, but it's still habit.
Well, I'm not a believer. I believe the odds of getting it are very low.
Well, I kind of look at it. If you've ever seen the Final Destination movies,
I have not.
Basically, it's a series of movies where there was a plane crash, and there were a lot of people that, for whatever reason or another, didn't get on the plane.
Right. And
yet, so they escaped death, but oh no. And death eventually finds them anyway.
Well,
that's the whole premise of the 4 or 5 movies that they have now.
Yeah.
I've got a question for you.
Okay.
And I am really here, and I will tell you, just from talking on the phone and everything, I'm not fishing. I am serious. I'm going to need some help.
Okay.
And the other person that I spoke to on the phone doesn't even own any Bitcoin and doesn't know a whole lot of the terms. I'm like, yeah, you're not going to be my guy, I don't think.
I'm surprised at the number of CPA firms out there that just are clueless. I have a number of people that I work with.
Well, let me stand for a little bit. I've been sitting driving.
All right. I have a number of guys who come in who want me only to do the capital gains on the crypto business, and then they take it to their tax preparer, their CPA firm, to do the rest of it. That's what they want me to do.
I'm not fishing for that. I am, and so I know I'm going to need some help because I haven't taken any big profits lately, but I know that we're supposed to, I guess, pay quarterly or whatever is the thing, so you don't end up owing at the end of the year fines on paying late or something to that effect.
Right.
But and I don't know, what is your schedule like today? I mean, how much time do we have? Are we on a timer?
No.
Okay.
I'm pretty much open this morning. So.
Okay. And I've got a proposition for you because I'm in a group, and I'm also I don't have and we communicate a whole lot, and there's a lot of people that have a lot of questions, and with your permission, well, I'm going to record what we're talking about here today anyway, just for my benefit, because I'm old and I forget stuff. With your permission, if you're game, I would like to record what we're doing, and then put it out there. Because I do a YouTube thing. I'm not a monetized channel, but I'm a subset of the guy that actually, quite frankly, gives us inside tips on big stuff. He's a long-term investor, but a lot of us are using some of his long-term stuff for some short-term gains and then paying it off and then just letting the rest of it sit. But with your permission, and I don't know if you do out-of-state stuff as well, I might be able to almost in effect answer a lot of their questions, because I just put up a Twitter thing today. I said, I'm going to talk to anybody if there's any questions that you want me to ask them. And it's already 30, 40 posts long. But I could almost even shoot what would be in effect a commercial for you, deleting the private stuff when we talk actual numbers and stuff like that. If you're game, if you're not, that's cool too. That's really 100% up to you. Or I can record it, and at the end you can say, no, I'm not cool with that.
That's what I'd rather do, if you don't mind.
Yeah.
You know, that way I don't have to be guarded with my answers. I can just
absolutely
give it to you, and then at the end, if I don't like what I said, then we can just let's don't use it.
Or and we can also do this. If there's something before you answer it, you can say, all right, so cut this, and I'll cut that part out. I want to 100% respect what you're comfortable with, if you're comfortable with anything at all.
Okay, all right.
And then actually I can edit it when I later on today, and then I can shoot you a copy to see if you're cool with it, and whatever is good for you. But I know there's a lot of people out there, and a lot of them here in the United States aren't necessarily in Texas. A lot of them are here in Texas. But if they dig you also, you might have you might get some clients out of this, because all of a sudden some of us found ourselves in a position where we need somebody like you.
Yeah.
And you would be amazed at how many people are asking everybody, who do I talk to? I'm like, well, Google in your neighborhood, and there's nobody that specializes in that.
Very few of us, I know, yeah.
So if that's, are you comfortable with that?
At this point, yes.
Okay. And then, like I said, if you don't like something, you just say, you know what, cut that, and I'll cut it.
Okay.
Is that fair?
Fair enough.
And like I said, if it gets you some extra clients or something, cool. Yes, sir. Yes, sir. So let me grab my tripod real quick. If you don't mind.
All right.
I didn't want to assume, you know.
Right.
And let me get my regular glasses. All right. So we'll go with that. And I tested that mic, and we are recording. All right. Well, thank you. I know this is a little different type meeting, so I appreciate that. So, I guess let me give you a little background. The group that I am in, we're all pretty faithful followers, and I don't know if you listen to any influencers on YouTube in this field, but a buddy of mine got me into crypto, and I didn't get in at 20,000. I got in at 14 on the way down, thinking, it's dropped, I'm good. And of course, we know what happened since then. But it was a good time to learn, and I was working then. And it was a neat little hobby, and it was fun to play with, and I got to learn a lot of stuff. Took advantage of the bear market to just learn. But anyway, I've seen a lot of influence, and I've listened to a lot of influence, and they're mainly in it for one reason. And there's a lot of shenanigans that go on. I don't think I'm telling you anything that you don't know.
Right.
But as I got a little more into it, I learned a lot more about the space, and I stumbled across this one guy who I kind of like his attitude. He's a little bit of a rebel, but he's straight as an arrow as far as ethics and stuff like that. I mean, he's the only promoter that I know that follows the law as close as he can. Like, if he does a sponsored content, not only does he say it, but he puts the terms of the sponsorship down in the, and he was telling us once about he was on the Telegram version of a conference call with some other influencers. And basically the project was trying to convince them, and that, and I'll even pay you more if you don't say that it's a sponsored thing. But basically it was to run it up and then to dump on the listeners. And he basically, if they were in a room, stood up and said, "This ain't right, man. You're gonna dump on the people that you're following? I mean, that are following you, that are listening to you." It's amazing the power that some of these people got over these people. Oh, they talk about this, and all these people come in and buy it. But everybody that I have listened to and no longer listen to, there's only one guy I listen to, and his name is Tyler Chico. On YouTube, he's Chico Crypto. Just heart of gold, and does a lot of, he's just the best researcher I've ever seen in my entire life. And the way that he goes from, what is this, to by the time that he puts the video out on it, I mean, it's ridiculous. And we call ourselves the Chico Army. And we're in a Telegram group, and there's a lot of shilling going on in there, but every now and then he comes in, he's very active in the group with us. And you know, his thing is always, there's no private group, there's no nothing. His motto is, the best advice in crypto is free, guys. Don't be going out there and joining pay groups or anything like that. The best advice is free, but every now and then what he'll do is he'll come in the night before because he's found a gym, and he'll tell us. Now, has he already established a position in it? Yeah, well, one time he didn't, and people went nuts during the video, and he kind of missed the bus on it. But you know, if he establishes a position, I'm cool with that. And if he cashes some in, okay, finder's fee, I'm cool with that. But for the most part, he's a long-term guy. I have, and I guess this is now back to me here, but he'll come in and he'll drop a hint. And you know, this is what the video is going to be about tomorrow. Because when he releases the video, there are some people in our group, but there's a lot of people that aren't in our group that listen to him. They go crazy. And they drive it through the roof. And then because he only does really good projects, by the time the rest of the world and the rest of the influencers start talking about it, we've already been in it for 3 months.
All right.
We've already been in it for 3 weeks. So the reason that I'm here today is because what I was doing is when the FOMOers come in, I take out my initial investment, I let the rest ride.
Okay.
So I know that when I do that, it's a taxable event.
Right.
And I'm going to tell you that you're probably not going to tell me anything here I like today, and that's cool. I'm not going to shoot the messenger because that's not fair. You know, it is what it is. It's a taxable event. But now, and then put those aside. And what I've been doing for the last year and a half is from those, I put a little bit into Ethereum. I put a little bit into Bitcoin. I brought what I needed to the real world. And then the rest would just sit there. And then the next time they did one, I would do the exact same thing. Now all of a sudden, it's a whole lot of money. And it's not the whole, oh, that's a little bit, they're not going to notice it type thing. And again, I'm not trying to look at a way to avoid taxes. I'm looking at a way to minimize taxes. And if I got to bite the bullet, I bite the bullet. I would rather do that. I would rather do that than end up getting an audit. I've been audited before when I was in real estate. Not because of anything I did. They just went, okay, all realtors. So I've been doing all the talking, so I need to shut the hell up. You said something on your website, and you were talking about audits.
Okay.
About if you do something and you get audited, that gives them permission to go back 3 years from that point?
Right. If you get audited, I mean, the IRS right now looks back 3 years worth of tax returns. But if they find something during those 3 years, then they can go back another 3 years regarding that particular issue. And then if they find something there, they can go back another 3 years. Technically, they can go back forever if they find something. As far as cryptocurrencies go, right now it's pretty much voluntary. You know, they got Coinbase to tell them, you know, who had accounts there, and that's really about the only thing they know. You know, the stuff doesn't get reported to them, and so they're just basically trying to get people to be honest and pay their taxes honestly at this point. But there's little that they can do. That doesn't mean that they won't audit you to look at your records and see how you're keeping them and make sure that you reported it according to your records. But as long as you've got good records, it's hard for them to dispute them.
But whatever trading you may do on Coinbase, I mean, that's pretty black and white. And any other exchange that you might do KYC that's here in America?
No, Coinbase is the only one right now that has given them anything. And Coinbase did not give them the transactions, they just gave them a list of clients. And so, they don't really know the transactions from Coinbase even.
And they don't know dollar amounts.
No.
But they can get the dollar amounts by calling your name, because just like I got audited because I was a realtor, they can just go, you're a crypto person.
Yeah, and I understand. I mean, anything on the blockchain technology is out there for anybody to see. And so, the IRS certainly is capable of resurrecting anybody's, transactions anywhere. But that's time consuming and expensive. They're not going to go after the average investor on that because of it. If they got somebody really, really big, it might be worth their time. But right now they don't have the expertise, and they're totally swamped trying to get stimulus checks out. They just don't have the ability right now to.
But with the suspension of payroll taxes for the rest of the year, and with everybody working a lot less, my original thought was they're going to go out farming for other sources of to replace those missing tax bases.
No, the one thing you have to remember is that the IRS employees are also working less.
Oh, that's true. Okay. I mean, not trying to get around taxes. I just want to.
Yeah. I mean, I don't know. I don't work for the IRS, so I don't know. What their situation is, but what I've heard is that they just don't necessarily have the staff right now to handle a lot. So.
Okay. So with Coinbase, if you do get the call, well, I guess here's a question that somebody had asked before, and I mean, if you're a little guy and you pull stuff to the real world, I mean, is it like other places? Like I used to work for Sleep Number. I quit. I actually left them a year ago, July, and we had to, if there was a purchase that was over $10,000, and if you go to a bank and you make a deposit or you open up an account with over $10,000, there's a form that you have to fill in. Again, not trying to avoid taxes, but is that $10,000? Is that the red flag?
Yeah, that's still in effect, and that does apply to these exchanges, but most of them don't cooperate with that. And the IRS really doesn't have a way of, at this point, of making them. Well, I shouldn't say that. I mean, they could take them to court and make them, but right now they're not. I don't think they're really getting too many reports from these exchanges, particularly the foreign exchanges.
Right.
Now the one thing about the foreign exchanges, if you use those, I mean, the FinCEN requires that you report any foreign bank account, any foreign assets, period, to them if it exceeds more than $10,000 at the end of the year. And so that is important to do because the penalties on that are hefty. It's 50% of the account, if you don't do it. So it's very important that if you do use a foreign exchange and you got more than $10,000 in it, that you report it.
If I've got $10,000 in it, but what if I just went there, purchased it, and then brought it back to my wallet?
What they really look at is to see if the assets in it at the end of the year, if it's more than $10,000 at the end of the year. So if you took it out, no. I can tell you this though. I mean, FinCEN, basically the reason they're there is to know where your money is.
Right.
At all times, even if it's outside of that. So they would still be interested in knowing that. But the way I interpret the law is that no, it's going to be in there at the end of the year.
Okay. All right, so here's a hypothetical question. Let's say that because of the laws and the SEC has ruled that you can purchase this asset, but you can't purchase this asset as a U.S. citizen. You can purchase this asset, but not this asset. Let's say, for example, that somebody used a VPN, used a DEX, a totally decentralized exchange, which gave them access because the exchange itself, the DEX itself, has their restrictions. They see where the IP is, and if you're a U.S. citizen, only this many show up, but if you're a citizen of Australia, everything shows up. Get ready to potentially cut this. And if you use an IP, I mean, if you use a VPN and you purchase an asset that that you're really not supposed to, and you buy it and sell it, or you buy it and you sell it later and everything, other than paying taxes on it, do you face potential legal issues?
Well, I mean, what asset are you talking about that the U.S. says you can't purchase?
A particular token, like there was a token. What was one? Let's just say it's an ERC-20 token that, for whatever reason, the exchange, in an effort to minimize their risk, just says, you know what? Until we know more about this, U.S. citizens can't buy it. And it's
yeah, but that's not usually a U.S. mandate that does that. I mean, they put pressure on these exchanges to cooperate with them and get them. A lot of times, you know, some places like Binance, for example, just get frustrated and say we're not going to deal with U.S. customers anymore because of that.
But they did.
But, yeah, but the only real reason that the U.S. bans you from buying an asset if it's a national security issue, and that's not going to have anything to do with taxes or finance. That's just, you know,
Sure shouldn't.
You know, that's just, you know, you can't sell, you know, anything that some country can use against us.
Okay.
You know, but otherwise than that, they're not going to ban you from a particular asset. Now, the institution itself may, because they don't want to deal with U.S. customers. You know, UBS, for example, you know, they pretty much went after them from a privacy standpoint, and because they were helping clients avoid paying taxes in the United States by hiding their money. You know, but they didn't go after the clients as much as they went after UBS.
Okay.
And then UBS said, well, we don't want to deal with U.S. clients anymore. And so, you know, that's what happened there. Now, they did go after a few of the bigger clients to help put pressure on everybody to report it. I don't know how that all turned out. But, you know, for the most part, that's the way they approach things.
Okay. So, the way that I understand it, the tax laws, and again, this is why I wanted to come talk to you. If it's something that you've owned for less than a year, and if you were to sell it, it's taxed as capital gains.
Correct.
Correct? Which is typically what percent, or is that a sliding scale?
Well, short-term capital gain is anything under a year that you've held for anything less than a year, and that's going to be taxed at your ordinary tax rate.
So it's no different than what I would be taxed if that was earnings
If you're
from a
working
job.
for somebody, yes. Yes.
Oh, okay. So what if it's 12 years or more?
12 months. If it's more than 12 months, then it's taxed at long-term capital gains.
Which is a lower rate, right?
Yeah, it's usually, you know, around, well, it's 15 to 20%. Can't get down to 10, so somewhere between 10 and 20, but most of the time it's 15%.
Okay.
That you're going to pay maximum tax rate on that.
Okay.
I mean, that's the simplification. Obviously, I mean, if you make enough, no matter which way you're in, you get the net investment tax added on, which is, you know, that 3.8% that they stick on you.
Okay.
Just, you know.
So I mean, just so that we know what numbers we're talking about. I mean, edit this. I started off with probably the market went to hell. I got my 12. I took it out and said, oh, okay.
Right.
Then basically when I was fortunate enough to hit the reset button, still in the bear market, it's probably about 6,000 that I started with. And right now, I mean, according to Blockfolio, I mean, total holdings, I'm at about 1,000 from that 6. all of that, well, I think of that, almost that is older, more tenured holdings that I've threw into a hodl wallet that I don't touch.
Okay.
However, the way that I've been playing this game, and again, it's not a game. I've told the people in the chat, if you come running in and run it up 200, 300%, I'm going to sell on your ass. I tell them, and they say, how do you know? Yeah. I'm not even looking at the cards. My research was in Tyler. I spent 2.5 years researching him. If he sees something and thinks it's sexy, I don't even look at it. I buy it. I just buy it before he finishes the video.
Right.
And if he gave us a heads up the night before, same thing. Because he's not a pumper, and every single project that he gives us is good long-term project. He hadn't missed yet in 2.5 years. Mm-hmm. That's how good of a researcher he is. So a lot of those gains that I took, where I took the profit and put it back over here and then let those ride, all of those are going to be less than 12 months. Hell, some of those less than 12 hours.
Vast majority of what I've seen, crypto transactions are short term. Yeah, that's even very little long term ones.
Okay. So I've made the sale already, so I'm sitting at normal, we'll say it's 30% tax rate. So here's my thinking, because I've got some credit card debt, I've got some other stuff, and I guess personally I need to sit down and do my gazintos and figure it out. What's the interest rate on what I'm paying versus that 30%. So I guess, do I pay 30, do I go ahead and cash them out and pay 30%, or do I keep it in there and hope that it goes, not all of it, but a portion of it? Do I sell that and pay 30% and keep paying whatever interest rate over here? That's the come to Jesus that I need to have with myself, right?
Yes, and there's a lot that goes into it depending on the type of debt you're talking about. I mean, credit card debt obviously is more expensive than,
right,
for example, a mortgage or even a student loan or even card debt. Anything that's got a set term payment is not going to be expensive, because sooner or later you get into the part where you're paying more principal than interest on those loans. Whereas credit card debt is almost always interest. It's heavily loaded with interest, and so that's stuff that you probably want to attack a little earlier. But simply what you're trying to do is, how much interest are you paying versus, how much you think you can make off the investment. Obviously, if you think the investment's better, then that would be the way to go. You also have to take in the risk factor. Obviously, the investment has a risk factor, and the debt does not.
It could all go to hell tomorrow.
Yeah, so you got to take that into consideration too, and that's what makes it difficult as to how you balance that. But and then you factor in too, how's the debt affecting your life?
I'm just paying more than I should, because I'm paying on some of those things. I was a single dad.
Yeah.
I got no help from the mom. So there's a lot of debt that I have out there that I finally, when I moved here to Austin, I should have just stayed in Waco. Because when I moved here, I was brought to help a distressed store, which was in a mall and not a freestanding store. And we got killed with traffic. We had people that were a mile from my store that were going 12 miles to go to another store.
Yeah.
And hey, what am I going to do? Sorry, babe, you don't get to eat this week.
All right.
But maybe next week. So took the loan to get the stuff down. Now I've been paying it down, and of course paying it down at a rate where they're like wanting to offer me more. But no, I think and I thought that was, so I was wrong. There was an answer that I liked that you gave me today, because that was kind of what I was thinking. I think it's better to pay off the interest.
Well, what I find for most people, debt is a more of an emotional thing. I mean, it's stressful to have debt, and so to get rid of that stress, that impacts a lot of people very positively. That they just want to do that. It feels good not to have debt.
Right.
And so you have to take that into consideration as well. It's not just a financial decision.
But it is a financial.
Should be, but for most people it's not. I mean, that's not why they went into debt in the first place, even.
Right.
You know, they had an emotional attachment to some object they wanted to buy. You know, and
I was a sales manager for such a long time, and you know, a lot of my guys, you know, they do this pitch, and yeah, I want to buy, and then they'd be turned down for credit, and they would say, "Oh man, if they just went," I'm like, dude, there's a reason that they got turned down from credit. They haven't said no to a salesperson ever.
Exactly.
All right, so that's what I need to do. Okay, and so that part's easy then. That part's easy. Again, it's back to Dex's. Now I didn't print it, but I downloaded it from Etherscan, and it's a gajillion pages long, all the different transactions.
Yeah.
Because on the decentralized exchanges, if you make too big of a purchase, there's a lot of slippage, and so it's better if you got X amount of money to just peck away at it. And so there's a gajillion different buys, and there's a gajillion different sells, and it's a gajillion different pages. And I can print that when I come back in. I guess it says on Etherscan what the dollar amount is, but I don't know if that's at the point of the purchase or sale, or if that is live and it's always changing based on the price of Ethereum.
Well, it should be at the point of purchase or sale. I mean, I suppose they might have a different column in there that gives you updated, you know, values if you're hanging on to it, but they should always record the point of purchase.
Okay. So let me download that, and I'll put that in an Excel worksheet.
Okay.
And bring it in. Now, there's a lot of transactions that if it was a heavily demanded thing in one of the dexes that the transaction failed. So, but there's a little red exclamation point next to those. Is there any tax advantage in doing what I'm doing? Is there any tax advantage at all to doing an LLC? Or
not from a. I mean, it would be totally different. Not from a capital gains perspective, no. LLC is primarily designed to protect you more than to save you on your taxes. In other words, it protects you from liability. So if somebody sues you, all they should get is the assets in the LLC.
Oh, well, I'm not giving any advice or anything.
Yeah, there's not a big exposure there when you're just trading like that.
Oh, but if I back over somebody's dog in my driveway, they could sue me. But if it's in an LLC, that's not.
That's not an attachable asset for that, right?
Okay, so then it does make sense.
Yeah, I mean, yeah, you're protecting yourself from liability that way. Of course, the best way to do that is simply have enough insurance on your car. If you back over somebody, that the insurance will take care of it. But yeah, that's what you're trying to do is keep those assets from being attached.
Okay. Okay, so here's a question. Arbitraging. I found about a month and a half ago with one of my favorite assets, but I found a huge disparity between the centralized exchange and the decentralized exchange. I would move it over here and sell it at the higher price, and send the Ethereum over to the centralized exchange, put it in a little bit lower. Eventually, they would come down, and I would buy it cheaper.
Yeah.
And the disparity was so large that the first time I sat down and did it, I did it for 24 straight hours. It was just like, surely it's still there. And so I would do it again. And the opportunity literally, and I'm not exaggerating, did not go away. The gaps didn't close for 24 straight hours. it's basically the same amount of money, but and I know that every time it's probably also a taxable event, but how does, I guess, am I taxed at that, we'll say 30%, am I taxed at that 30% basically for the full amount because they were free, in essence? I took, we'll say 200 of this energy web token, sold it on Uniswap, sent the Ethereum over to a centralized exchange, and with the same money bought 20 more.
Okay.
And just kept doing that and kept doing that and kept doing that and kept.
Every time you sold, you had a taxable event. Okay. The every time you bought, that just simply establishes your cost basis, what you start with.
Okay, because what about staking rewards? Or staking rewards or airdrops? How those are taxed at the full amount basically because you didn't pay for them?
Right. Right.
Okay.
And that's, in other words, your cost basis on those is zero because you didn't pay anything to get them.
Okay.